Hello, I'm Finola Burke from RaaS, and today we're focusing on Know Your People RegTech company, Kinatico, ASX ticker KYP, and joining me to discuss the FY23 results is CEO Michael Ivanchenko. Welcome, Michael.
Hi, Finola. Good to see you.
Great to have you back. So Kinatico has reported its maiden net profit of $237,000 for FY23, which was quite a big turnaround on the $1.5 million loss reported in FY22. And it looks like all the additional revenue generated essentially dropped to the bottom line. You embarked on a plan to grow your SaaS customer base. Are you happy with the pace of conversion that you achieved in FY23?
We are, Finola. Look, we said at the beginning of the year we'd embark on a transformation piece of work that we called CGIS, Continue to Grow and Innovate at Scale. And that was all about ensuring we evolved and positioned our solution suite that added value for organisations and gave them a reason to enter contracts and for us to transform to a much greater percentage of SaaS revenue. We've seen in the evidence that not only is there a demand for that out there, but we've been successful in that execution. And so seeing the growth in SaaS as a percentage of our revenue, but also demonstrating our move away from a dependence on just the hiring market or the initial hiring of candidates to providing that relevance right through day in, day out for compliance management for organisations.
Michael, SaaS revenue at the end of FY23 made up about just under 18.5% of total revenue. At what point do you see SaaS revenue becoming 50% or more of total revenue?
Look, I think the way I'd look at that is that when you look at even Q4, we were already at 28%. And so that continued growth and the trend is our target, is our trajectory. I'm not going to put a time frame on 50%, but I'll answer it by saying our aspiration is much higher than 50%. So we will continue to do whatever we need to do to position the value within our solution that drives the desire for organisations to convert, and certainly continue to build that number, and we expect it to continue to go up.
And Michael, we continue to hear of large enterprises and governments slowing expenditure decisions in the face of the broader economic environment. Is Kinatico seeing any slowdown of potential enterprise sales decisions? And the flip side, what about the smaller end of the market?
It's a really interesting one in that what we're seeing is effectively a dual speed economy, in that hiring is definitely slowed. And if anything, that's underpinned the strategy of our direction in getting away from the hiring market. But at the same time, the needs for organisation, particularly in challenging environments, to actually demonstrate and be confident around their daily compliance, at the same time that we've got legislative and external expectations of greater visibility and greater quality in that area, is actually we're seeing an increase in the demand in that sector. All that being said, we're still seeing probably a minor increase in the amount of time taken, particularly for larger organisations, to sign off on some of the contracts. But we see that simply as part of the maturation of the market, if you will.
And Michael, you still have quite a sizable war chest. There was $9.6 million at June 30, despite your share buyback. Are there any attractive opportunities presenting themselves in this environment, and are seller expectations tempering at all?
No, there's definitely opportunities. I mean, we continue to look at a lot of different things, and we continue to be very fussy about making sure that anything that we did embark on was the right fit, and most importantly, doesn't distract the management team from the trajectory that we have at the moment. But should the right opportunity present itself, and I think there are good bargains out there, then we would definitely act.
Well, thank you, Michael, for joining me today to discuss the company's FY23 results and outlook. I'm looking forward to catching up with you on Kinatico's progress through the course of the year.